Is the fairy tale soft landing story about to end for markets in 2023? With both Russia and Saudi Arabia changing the barrels and reducing them per day, we've got problems. On top of this, we also have a $74 billion hole coming out of China for the biggest stock in the world, and markets didn't like it. But we are at a positive point for bulls. The 20 moving average, possibly the most important indicator over all of the last couple of months, has now been reached again, and we did see some buying after a pretty brutal sell. With central bank liquidity going back up once again, and of course the biggest stock in the world finding a rebound from the most traded zone, we've got to discuss markets. But what might be even more surprising is the defensive nature of the last 24 hours by Wall Street. Let's take a look together right now. Well, hello, ladies and gentlemen, and welcome back to the Daily Show. We discuss macro, leading indicators, and of course, the hottest charts. We'll be covering all of those later on in today's video, but let's get started with rotation. It was all about the biggest stock in the world being Apple over the last 24 hours, and it was down many percent at one point, falling and falling until it did find some bid near the end of the day. But I think semiconductors were probably the standout. We saw big sells across QCOM. Nvidia, the best stock performer recently, was down another 1.74%. And the market started to go into some healthcare stocks and defensives that we haven't seen in almost a month. Let's also talk about VIX. So volatility index has been something that we've almost never talked about for the last couple of months. Why? It's done nothing. It's been a pretty bad pair. And of course, we've seen the VVIX, which is the volatility of the volatility, stand out as one of the best indicators of seeing underlying kind of issues or problems about to occur. But it turns out the Bank of America believe the current cost of VIX calls, which of course from the 1st of September, should have told us a few days later, that we basically are seeing one of the cheapest call costs since 2020, and that's before we had any problems in the markets. So we've returned back basically to the new norm and a market that doesn't worry about anything. But take a look at this survey. We mentioned that we thought the bears might be underneath 30%. What I didn't expect was the people that were neutral in the survey to all stack in bullish. Yeah, that's a very bullish looking survey. Suddenly coming out 42.2%. I think almost nobody got this right in the comments section. And you can kind of see why we've sold off this week so far. The sentiment from at least most investors out there, retail traders, etc., is incredibly bullish. And look how fast we were able to click and switch that sentiment as the markets rallied. That brings us back to something I've shared over on our Twitter or X profile, which you can look at in the links in the description down below. And you'll see that we've got the bullish percent index here. It's not acting in a way that tells us that this is really a proper rally. If we end up getting a new low, which I'll update on the weekend after the Friday close, so make sure to follow us over there, then we could be looking at a potential capitulation event. Now, we've got some data on this, so let's take a look at that in just a moment and break down what we expect over the next coming weeks. We thought this week might be negative. We kind of feel like next week could be positive, and then it's going to get very interesting for the month of September. What about CPI? What about the Fed meeting? Well, nothing's really changed in terms of expectations that no rate hike is about to come. So it really comes back down to the inflation numbers that are coming out next Wednesday in the markets. And it could be like kind of like a sell the rumor, buy the event type of approach. We've seen some weaker CPI numbers coming out from some other Western nations, and possibly it's not as bad as the market thinks. But of course, all eyes are particularly on the energy and the mostly really the expectations that we are going to see a bit of a tick up in inflation and problems there. Let's look at the overall seasonal concept of September. It's the weakest month of the year. We know this. In pre-election years, we also know that we tend to get a double dip near the end of the month. Now, we're in a post-Labor Day week at this stage, which tends to be a 50-50, but we've led into it with weakness in price action. Pre-OPEX weeks, though, tend to be positive, 30 up, 20 down. But where it gets most interesting is, of course, post-OPEX. And Wayne over here has done some good studies, and he's basically brought up the two weakest periods for September, where we are right now, which is September 3rd to September 10th, and then September 19th to September 26th. And this has taken well over 50 years of data, so it breaks down a decent subset chunk of the markets and really understands, we do see sell-offs. They tend to be somewhere in the vicinity of around 3.5% to 4% when they go kind of to their worst. And sometimes they've been as much as 6% in these markets. Why does it happen here? Well, again, where do we tend to see the sell? We kind of sell sometimes at the start. We see a rally, and then, of course, post-OPEX is usually where the nastiness begins. If price action agrees with this, hey, if you've got the data to come with it, why not? And, of course, we'll be following along this story, and make sure to subscribe if you're interested in checking out how all of that stuff ends up working out. Let's talk about January and, of course, the bull case scenario right now. With positive year such as we've had, which is really big positive all the way from January to August on both the S&P 500, the Dow, and of course the NASDAQ, it leads on to whatever weakness we tend to see in August and September and October as being a positive. 100% of the time when we've seen stats like this, and yeah, okay, we don't have a huge amount of subset data here, we tend to have a positive end of year. And I think that we cannot ignore that we are in a pre-election year, which does tend to have what we call a double dip. Basically a market sell and then often a doubling sell. And I'll update our normal chart over on Twitter as well, so you can see that often the second sell does take the low. For investors, are you excited right now in markets? Well, it's probably trading around 18.2 or something like that, forward PE. So is it cheap? Not really. Is it expensive? Well, it's been higher before. So, if you can get something around a 16.8, a 15.5 is amazing. Anything in there usually means that an investor is very excited by the dip. The dip right now is specifically good for some stocks. And I've noticed that growth stocks in particular have come down to some really nice levels. We've talked about ARK, we've talked about, of course, Zoom recently, and a whole bunch of other stocks in the past. Even PLTR and SoFi are starting to come down to more acceptable levels now on the markets. What about dark pool liquidity and large trades before we get into options and the charts? Well, we did see some large positionals in short S&P 500 funds. Now, if they're correct, then of course they're looking at the market to weaken off quite substantially. But I'm not sure if we saw enough transactions in the last 24 hours. There wasn't anything really notable like we've had over the last couple of days that have helped us to maybe gain a little bit of a bearish tinge to the show. Let's talk about now unusual volumes. There was decent volume going through in the last 24 hours. And you can see here that some other normal kind of suspects were there. Zoom continues to get a lot of interest on it. People still stacking more puts than calls at a 1.29 near the high. And it held its own considering the market was down. Tesla also held itself pretty well, 1.06 times normal volume. People still very excited on that. And quite a lot of interesting stocks here. Broadcom continues to get a lot of trade on it. 1.4 times. However, it was down 1.7%. I have been negative on Broadcom more than any other semiconductor recently, and there are a few reasons why that we've discussed before. So 40 million is the general kind of options volume. We had 51% calls, 49% puts, and that's pretty bullish, really, because it was a down day. So we saw most people buying instead of actually selling their positions. And this is symptomatic of course, that sentiment result that we saw before in the quiz. Let's take a look at what's doing well over the last 5 days. Energy stocks, metal stocks, that's about it. Everything else has been pretty bad now on a 5-day rotation. But here's where it gets interesting. The last 24 hours finally saw the resurgence of something big. Defensive stocks started doing well, guys. Utilities, healthcare, and staples made up some of the top indices sectors. So basically, this is a big deal because it hasn't happened, I would say, since the pre-August sell-off. If we continue to have this for another 2 to 3 days, it could mean we actually are going into some form of capitulation. And we have to watch, of course, if the street is getting sneaky and going into defensive positions. Yeah, that's pretty much what we're looking for. Semiconductors, the best stock market index, was down 2.22%. But let's jump over to the charts now and take a look at what's going on in the charts. Straight away, we look at yields. Did they make a new high? In this case, on the 10-year, no, they didn't. Of course, set your alerts and make sure you're aware of that. And I'd say they probably can't until we see the CPI numbers next week, which will be the big event here. So I think that maybe we'll see rates just kind of hover near the highs and probably pressure that 5.1% just before the inflation numbers. But if we do get through 5.1, you'd have to expect a newish low on S&P 500 and then potentially a movement to the next level of equilibrium, which we'll talk about later on. What about treasuries? No interest here, although gap traders and island-based reversal traders will be excited if we end up getting a little rally in the next session or the session after that, because it kind of looks like it's making a little island reversal potential here. I'm not going to probably trade that, but I do think at this stage there's still a real possibility towards 88 and 90 in terms of where the market's going to. But yes, it's a gap down, and now it's sat there for 3 days of trade. So if it gaps up, there could be some momentum for day traders and scalpers. The volatility of the volatility, or the VVIX, continues to rise, although it has slowed down. If that rises again, of course, it could be just really a increase in volatility or speculation that maybe the inflation numbers are going to be worse, and it could be just a sell the rumor, remember, buy the fact in this case. What have we got going on with the overall market in terms of above, below 20 moving average? Well, this is more like it for the bears. This is exactly what you want to see. You want to now see a new low of course, more stocks underneath, but that's going to mean that we're below most likely 43.30 in the stock market. And it's symptomatic, of course, with what tends to happen, although that was a pretty strong rally, stronger than a lot of the ones we've seen in the past. Also check percentage of stocks above the 50-day moving average, which just made a new low, and that's getting back into those 30s now. Once we enter into the 30s, if we get into like a 25 number, which you can see here is pretty symptomatic to a nice sell-off, then that usually means that buyers and people that are buying the dip are getting a little bit more excited. Skew also got crushed. That's good for the bears. And maybe there's some weakness signs out of China. We'll look at the index later. It's at the defended zone again. So will they defend it? Will we see an uptick in things like iron ore futures again and copper? Well, of course, we'll be watching this. Keep watching iron ore, keep watching copper over the next week especially. Let's move to the US dollar. I guess it hit the first target. Well, not quite. I said 105.16. So we got to 105.13. Let's be real here. And it still looks very strong. So there's nothing really going on with the US dollar other than strength, and basically pullbacks on smaller timeframes are being met by bullish demand. Gold's holding pretty strong considering, but there's no real trade on this at the last 24 hours. It's just back to the 20 moving average. I think it's confused. I think it might be waiting for inflation, and it's all about yields. GDX, it's holding as best it can around that 28.50 zone, although this is where bulls need to come back in. So we're looking for some kind of momentum shift to actually show us. Maybe a good one would be like 28.75 to see a close above there. Should be hopefully bringing home a few more bulls on the stocks. Remember, the stocks are still trading well underneath where the spot price is currently. So they're technically a bit cheaper, but we do enter into a weakness period now, usually for gold spot, and then we tend to get really bullish on it again November on the channel. So we'll find out if that's the way it's going to be. Again, inflation, if we get a new 5.1+% on 2 year, do not think gold's going to do well. Unfortunately, it'll suffer, but I am bullish on it on the medium to long term, which is more like a 6, 12, and 24 month kind of period. Let's take a look at oil. It pulled back a little bit, so maybe getting rid of some of the concerns, but still it's in an upward trend. It's still getting bought pretty heavily. And even if we scroll into the smaller time frames, it's not like we're making lower lows yet. In fact, we've just been basically posting new highs. We'd like to see it break 88, then it could move towards 90 a barrel to 92. And then around there is where I think there's going to be weakness. We have seen some large sellers from Wall Street in our last video where we talked about them selling energy stocks, but at the same time, it's still incredibly strong on those charts. Let's move over to Apple. So last 24 hours, we thought maybe we'd open about 180. Well, we opened way lower than that. Thanks to the China ban on part, I think it's like something to do with government people not being able to use the devices or something. I don't think it's that big a deal, to be honest. But anyway, I'm sure it is a big deal. It moved it down to 173.55, and we ended up going pretty low. So the market obviously freaked out on it. I think that this was already, well, the reason I say it wasn't a big deal is I think that already price action was showing us that we were going weaker. And more importantly, what's probably going to happen here is if you fall into those storylines, often they end up reversing. You know how it's played if you've been looking at markets for a long enough period of time. So we ended up going to the most traded previous accumulation zone again, and we found bulls. I must admit, though, this looks pretty bad on the charts. Let's take a look at the weekly just to get a bit of an idea. This would close, if it closed like this, as an engulfing candle. So that is that last bullish candle, looked quite strong, would be pretty much negated and taken out as a bearish candle. So if we keep seeing some selling through Friday, this could mark the biggest stock in the world moving down. And when you think about it, the last time that Apple was at these lows, we were basically sitting at close to a 43.30 on the stock market. So you got the biggest stock in the world, the biggest stock in the market, actually finding weakness like we should be down on the lows again, and the rest of the market hasn't played catch up yet to it. So yeah, I'll be watching this one very closely. Mark the low, see if that happens. If that does happen, usually Apple precurses a lot of the time the rest of the market. So it could mean that we're finally going back to 165 or even a 155 kind of number here for Apple. And I'm sure a lot of you would be pretty interested in those zones. That will time in well with a 4200 SPY. Let's discuss here Tesla. Pretty strong, I got to say. It's holding that low. Every time the market tries to sell off, you can see it's coiling up here. And we've got a 242 low and we have a 260 high. Now, I've still got concerns over 260 to 263 in terms of there being bears there. But if this number is taken, then expect a pretty fast move, I would say, for day traders down to around 228. And then after that, if we keep falling down, then we're probably going back to that 200, even 180 period on Tesla. For big bulls, you know what you want, guys. It's all about 273. You get above there, maybe a new high on Tesla, I think, is in store. Let's move over to semiconductors. Pretty weak over the last 24 hours. However, it did find some buying strength. You can see it ends up as a hammer after gapping down quite substantially on the 20 moving average. I'd say that's middling. I don't really have too much opinion on it at this stage. Another one that everyone's talking about now is Disney. Yeah, so we've had to go at this once before in this zone. Of course, we knew that once we saw that weekly candle, it was probably going to go down, and it did, and took stop loss. So in this case, Disney just keeps failing and failing and failing and failing, and it looks inevitable that it wants to take those 2020 and what is this date? I think it's like 2015 or 2014. Yeah, I remember that. 2014 lows. So look at the timing though. October. Hilarious, yeah? We're going back in October, and it's the exact same kind of period that we could be taking it. I would mark out the low here on Disney, 78, kind of 80. This is a zone that I thought could happen for the mouse, and it looks like it is going to go down there. But I don't discount the stock. I think there is still value in it at these levels eventually, but there's just no price action to say that it's found its low yet. Be very careful. This is where buying the dip and it just keeps dipping. You've got to be very particular about the way that you buy these dips and the way you look at them. CQQQ, back to the defended level, guys. This is interesting. $38. So basically, this is where we've seen central bank intervention. What if it sells off on Friday? Will we get over the weekend immediate action by the government? Well, I think we could. So we'll watch that one. We'll check it out. The ASX 200 back down to, of course, a little bit of previous resistance that could act as some demand. So key level there for the Australian market. And the German market keeps putting in dojis. So we saw an outside day against the other doji, but basically it's a doji followed by a doji. You know what that means? It's indecision. If we breach either way, we're going to make a pretty big decision. And it also could give us an incredibly good trade zone in the future. So I don't mind finding a couple of dojis, a little bit of a break before the next move. Let's move now to the US markets. And of course, it's US 2000 kicking off. And it's trading on the daily or the weekly 20 moving average here. And it's come back to the doji. So buyers are going to come in. It's kind of the zone for them. Otherwise, we're going to a new low here for the Russell 2000. But I don't really like that chart anymore. We had our good play on it this week. You guys found it. Island reversal on the Monday live stream trade. It was a great one, so well done. And then we move over now to the Qs. So the Qs don't tell us much, but let's have a look at the NASDAQ itself on the futures market action. So the first thing is it didn't quite go as low as I'd hoped. So we ended up going to 15,135. I think that's a little soft for it. I would like to have seen it go a little bit lower back into the demand over here. Of course, we talked about 15,050 to 15,100. So it's still in a downward trend. And like many things, often the S&P 500 shows us the better way. So first up, let's go back to the S&P 500. The S&P 500 sits right on, and it has held again so far, the daily 20 moving average. And we know this is key because there's been so many taps of it where it's been respected, at least initially. If it can put together a rally, which we'll look at in a moment, then we have to believe that there is a new high in store after this point. And there are some very key levels that we'll have to look at and pay close attention to. Could be wrong, but of course that's trading. We're always going to look at it. Let's move over now to just central bank liquidity and mention this. So we're seeing an injection going back in from the US central bank liquidity, which is this green line. It's so sneaky. Wouldn't you? I mean, they're meant to be tightening. I mean, what is this? So I think clearly there's something problematic underneath the hood, and they're trying to this is what happened last time. They foreshadowed a bit of that, and then all of a sudden, oh, it's all broken. Well, we'll find out. But yeah, something very sneaky there, I feel like. Let's move over now to this chart again and take a look at it. And we'll just remove these session volumes so we can get rid of those. And we want to still mark out what we thought. So the last 24 hours, we kind of had this suspicion that we would get back below and we'd go back to 44.40. This was always our aim. So the S&P 500 is playing a better game than the NASDAQ. Then we thought we'd get that lower low. Well, that's checkbox. Now will we get 44.70 and close above? Well, if we do that, then we could be seeing a temp bottom for now and a movement at least back to 4,500, if not a new high, in my opinion. Now, if we don't get that and we just sell off here, which is very possible, and of course make a new low, then that exposes 43.30 again. Yeah, it exposes all the way back down to the low. And that would make some sense to what the data stats say. If we get really weak, let's say Friday into Monday, into Tuesday, into rally off inflation, into rally into post-OPEX, that would all play out to that idea that maybe we could reach a double dip for September into October, 4,200, 4,150, and find a really key level. We don't know what's going to happen at this stage until we get underneath 43.30 and daily close. We won't really have that confirmation, but we do know that we're at a critical level for the bulls. We took the low, we hit the demand. Now we want to see them rally it. If they don't, well, I think we've got our answer, possibly that the bears are in control temporarily here ahead of inflation. What about crypto? Nothing. I know it's up, but it's just sitting, it's coiling. That is the most boring Bitcoin chart and the most boring precursor Bitcoin chart I've seen in years. And I think it's just because of the time we're in. Remember, we are excited for Bitcoin because of the halving event, but it's just not happened yet. So yeah, make sure to check that out in the future. Now, what else do we have going on? Of course, we do have CPI next week, which is the main news. If we scroll back here, there's just a little bit of information coming out for the US. So it's mostly on to next week now, and we're talking about Wednesday, September 13th. So if you're not already aware, we have a conference coming up in Vegas, and it's going to be really exciting. We've got ex-Goldman options traders. We've got a whole bunch of CMT experts in their field on different indicators, some great ones that we really like to use as well. And of course, we're going to give away 4 session tickets. So all you need to do to enter is just put in your name and email address, and we'll draw the prize by the 15th of September. If you're able to attend, of course, come and see us, and it's going to be a great event. So yeah, guys, a little bit of a thank you for watching the show over the last couple of years. There's 11 world-class trading experts coming. I'll be doing a speech on something I've never talked about before, so it's going to be pretty damn good for that. And of course, it's at the Wynn in Las Vegas, so it's going to be awesome. If you're interested, enter in the links down below. And of course, we look forward to meeting you there. Bye for now.